I made over $6,000 last week trading forex, all with one trade. Here's exactly how I found the setup, executed it, and managed it on its way to a profitable exit. Step 1. Daily. The first step in my analysis process is always the higher time frames. High time frames are the most accurate and they have the least noise. For that reason, I like to assess the weekly or the daily time frames to identify an overall idea for my positions. So when I'm on the daily time frame trying to build an idea, all I want to consider is the near-term range. Now what we can see is the market is obviously topped out here, that's the high of the range, and the bottom of the range is just here. Now to determine what kind of direction the market will move in, we can actually look a little bit further to the left. And we'll see an imbalanced demand zone here that was recently filled. Now following on from that, we also have a break of structure happening at this level just here. This break of structure leads me to believe the market could move to the upside through this range. We have a daily demand retest and the market is now bullish because we've broken structure. In terms of identifying a target area, we have this supply zone just here, which is lightly imbalanced. So we can see this wick did not retest that zone, meaning this is going to act as somewhat of a magnet area for price. So with this in mind, my overall idea would be to see Euro USD accelerate to this level, but I would also consider the possibility of a pullback somewhere lower into the range before we continue going higher. And this is an idea you will see crossover when we move to the lower time frame. Step 2, the 4-hour and 1-hour. Once I have my high time frame ideas in mind, I'll drop down to the 4-hour and 1-hour to identify potential trade opportunities. So now on the 4-hour time frame, we get a bit of a clearer picture as to the current range. One of the first things I notice is that we have some trend liquidity. Now when I see a trend line like this, I usually expect it to be swept, because due to mass retail trading trend lines, there's a lot of liquidity around these levels. So I'd be more inclined to see this trend line break through. Now what we can also see is that down here in the lows, we have this open imbalanced demand zone. So continuing with the narrative of potentially taking the market higher, this would be a good area for the market to fill before we continue moving up towards this target. Now another thing I noted on this time frame is that we had a 4-hour supply zone retest. So the market traded into the 4-hour and we saw a huge amount of selling pressure coming in. So while my narrative still generally points to the upside, we are now seeing reasoning for a potential short-term reversal. We have trend liquidity, we have an open imbalanced demand which is likely to be retested, we have huge amounts of selling pressure coming in from this supply, and on top of that we can see that we haven't really pushed from this area with much momentum. So you see these movements are strong and fast, these are high momentum moves. But then we can see after the selling pressure came in, this movement is not so strong. We failed to make a new high and the market is now kind of weakening and starting to move sideways. So with a lack of momentum and all of the other factors considered, I was now thinking that it's quite likely if an opportunity arises on the lower timeframes that we could sell down from this low momentum area to target first of all this demand just here and second of all target this larger range down in the lows. Step 3, low timeframes. And now that I've formulated a full idea of where I think the market is going to go, I'll use the low timeframes to identify an actual entry and get into the position that I'm looking for. In this instance, I used the 10-minute time frame. So down here on the 10-minute time frame, now we want to identify if there is a viable and logical entry to make in the current range. And what we can see in this instance is that the market had swept some equal highs. So we have here a level of relative equal highs. We have 1, 2, 3, 4, and then the market came through and swept at this point. Now this sweep took us into a 10-minute supply zone, which is this last candle before the impulse down after we traded into that high time frame supply. So at this point, I see this as somewhat of a distribution schematic. So whether you're familiar with Wyckoff or not, basically we see a consolidation range at the end of a buying move showing that sellers are kicking into the market. Then we see one final push, an overwhelm of selling pressure, which brings us back down. And from a distribution schematic, we will generally be anticipating a push to the downside. So now by taking a look at this 10-minute range, we can see that we did indeed have a break of kind of internal structure. So with the distribution, we had the sideways pattern, then we had a push up, higher high, higher low, higher high, pull down, break of structure, that forms a lower low, and this essentially validates my selling opportunity. Step 4. Execution and management. By this point, I've formulated a fully valid trade idea, and now it's time to secure an entry. By my rules, I need a 1 to 3 R minimum, meaning I'm looking to make $3 for every $1 I risk. Else I won't even bother taking a position. So following the closure below the low, I got into a trade, and my position was executed around the 482 mark with an 18 pip stop loss above the high. This makes the target for the trade 4.3, which beats that 3R quota that I look for when I get into positions. As you can see, this entry was not particularly prime. There was a better opportunity, and I'm going to break that down after I've showed you my trade. But all in all here, we have a nice validated setup, and I'm happy to get into the market with this risk due to the confluences we've spoken about so far. And now, allowing the trade to play out, you'll see that we had pretty quickly a nice movement in the right direction. And we actually came all the way down towards these previous lows. Now at this point, I exited a fair amount of my position, and I did so at a very good point. I did that because we were trading back into these lows. We'd swept some liquidity under these lows here, and it was possible that we got a reaction from this point. By this point, you can see I secured almost 3R on the position as it was. And after the market pulled back a bit, I actually ended up closing the remainder of the position once we re-met this low again. I decided if the market is going to move down, it would be better to wait for a solid break of this low, and then we can look at this supply for an entry. However, this didn't come through, but I managed to secure the full profits on this position around 2.7R, which across the accounts that the trade was executed within equated to around $6,000 in profits. I have one more important bonus lesson for you, but first let's take a look at this trade in real time and the results that I made from it. Here's the trade sent out to my mastermind community. Here's the trade running in my personal accounts. And here's those nice big blue numbers that everyone loves to see so much. So on to that bonus lesson. There's one thing I could have done better with this trade, which would have improved my risk versus reward and got me a better entry. Every time we take a setup, we should always look for the things that we could have done better, as this is how we improve as traders over time. So as I said, there is one thing I could have done better. And instead of executing after we broke the range, I could have waited for a pullback. Now you'll see the area that formed the initial reaction has quite a clear supply at the top here on the 10-minute time frame. And there was imbalance leading into that. So generally we can assume that there is going to be a retest of this supply zone. So I may have jumped the gun on the position a little bit, because had I entered at this level instead, which would have made total sense within my rules, I could have chopped my stop loss down from 18 pips to 4. Therefore, if I had taken profits around the point that I did, I would have actually had a 14.5R position. Now, obviously, in hindsight, this would have been an awesome thing to do. And in fact, in reality, it would have been possible for me to secure an entry from this point. Am I mad with the profits I made? Absolutely not. However, there's always room to improve, so reviewing the trades like this can really give you some new lessons and insights into what you can do better in your own trading, and that is how you improve over time. So I've noted this, and I'll keep it in mind for future positions. Now, I want you to have the best odds of being a successful trader, and most traders don't make it in this industry. However, my strategy has generated results for people like this, and this. You can learn this full strategy and then put it into action with me every day, and I'll provide you with daily analysis videos, markups for every trade that I'm looking to take, case studies for all the trades I take, and consistent education every week, as well as personal support inside of my mastermind. I've crafted multiple full-time traders and helped many people reach $10,000 per month and beyond from zero. So if that sounds good, hit the mastermind link in the description and I'll see you on the inside. And if you don't want to do that, at least check out my free Traders Transformation course. That's going to give you 10 lessons as to why you're not winning and how you can turn your results around. So for now, that's all from me. I hope you enjoyed this class, and I'll see you in the next one.